Hello everyone. Today we are taking a deep dive into this Reuters story, Space ETFs booming in anticipation of SpaceX I-P-O. We are going to break down exactly what happened here and what the real risks are that every investor should know about. But before that, you are watching Decode Daily News, where we take the biggest business and finance stories and decode them so anyone can understand. If you are not subscribed yet, hit that button right now. So let us get into it. Space-related ETFs have attracted $1.3 billion in new cash in the last month alone, so that line really caught my attention. And here is why. $1.3 billion in a single month, flowing into a sector that barely existed as an investable category just a few years ago. That is not slow money. That is a stampede. And when you see money moving that fast, the question you always have to ask is, are people buying the opportunity, or are they just buying the hype? Let's see what is written ahead in this same news paragraph. Pushing total assets under management to $3.3 billion, according to Morningstar Direct. Now sit with that for a second. $3.3 billion total in a segment that is still in its earliest stage. That word early stage matters. It means this thing has not fully formed yet. You are not buying a proven industry. You are essentially placing a bet on something that is still being built. And investors are pouring billions into it. That is either very smart or very early. And right now it is hard to tell which. And this is where the real story is. One of them, the $1.27 billion Tema Space Innovators ETF, has accumulated more in assets in the 7 weeks since its launch, and that is not a small thing. 7 weeks, $1.27 billion. That is the kind of number that makes Wall Street pay attention. New funds usually spend years trying to build that kind of asset base. The fact that this happened in under 2 months tells you that investor demand is very real, but it also tells you that the timing is being driven by one thing and one thing only. And the reason behind it tells you even more than the 972 million UFO has in the 7 years since its debut, according to data from Morningstar Direct. Now let that sink in. 7 weeks versus 7 years. That contrast is almost impossible to ignore. But here is what that actually means. This is not about the space economy suddenly becoming more valuable. This is about SpaceX creating a once-in-a-decade media moment. And smart fund managers know exactly how to ride that wave. Now this is the part I could not move past. There are still so few companies involved that the overlap between the holdings of these funds is going to be quite significant. And think about what that actually means. When an ETF analyst uses the word significant overlap, that is a soft way of saying something important. It means that no matter which space ETF you pick, you are mostly buying the same handful of companies. So the diversification you think you are getting may not be real. You are not spreading risk. You are concentrating it across multiple funds that all look different on the outside, but are nearly identical on the inside. That is exactly where my take comes in. But real quick, before I give you my take, this video is for educational purposes only, not financial advice. Always do your own research before making any investment decisions. So, the space economy is a genuinely interesting long-term story. Satellites, communications infrastructure, potentially even orbital data centers. The underlying thesis has real substance. And stocks like Rocket Lab gaining nearly 400% in a year, that tells you the market is already pricing in a big future. But what concerns me here is the timing. SpaceX filed its registration documents just days ago. The IPO has not even happened yet. And already we have 7 funds chasing the same small group of companies, with more funds on the way. That pattern, where products multiply faster than the underlying market can support them, is worth paying attention to. The one thing every investor should understand is this. A great company does not automatically make a great ETF. Especially when every fund on the market holds the same stocks in roughly the same proportions. You are not buying a diversified bet on the space economy. You are buying a concentrated position, dressed up to look like diversification. If the space economy grows the way its believers think it will, this early bet could look brilliant in 10 years. But the next few months around the IPO could be very noisy, and noisy markets tend to make the ride uncomfortable for investors who entered at peak excitement. If you found this breakdown useful, like this video and subscribe to Decode Daily News. We break down the stories that actually matter for your money every single day. And I want to hear from you in the comments. Are you buying into space ETFs right now? Or are you waiting to see how the SpaceX I-P-O actually plays out? Drop your answer below.